Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. In corporate news, Deutsche Bank sees a more profitable 2025 while BBVA announces a buyback programme. It's a big day for European corporate earnings. We'll break Shell's numbers shortly. No hurry to cut. Jerome Powell says the Fed is waiting to see more progress on US inflation after keeping rates unchanged. The ECB is up next and expected to cut later today. Plus, an American Airlines subsidiary plane with 64 people on board collides midair with a military helicopter in Washington, D.C., prompting a huge search and rescue operation in the Potomac River.
In the meantime, a quick check on these markets here. Eurostat 50 futures higher. They are in the green by about 0.3%. The FTSE 100 flat on the session, though, seeing a little bit of a divergence there. A 10-year, it is Fed day at the end of the day. The day after Fed day. 452, we'll call it on the 10-year. That pushing the dollar up. Euro dollar weaker this morning. 104.13 on that currency pair. The countdown to the opening trade starts right now.
Thursday morning, good morning. There are a lot of earnings for the market to digest this morning. We're going to dig straight into the numbers and bring you CEO interviews throughout the show. Let's start with Shell and the breaking news that we have over the last couple of seconds. The buyback is exactly in line with expectations at $3.5 billion. However, the Q4 adjusted profit line comes through at $3.66 billion. The estimate there, $4.36 billion. We will speak to the CEO shortly and figure out why that discrepancy exists, Anna.
Yeah, focus on that buyback figure as well, coming through on that red headline then at £3.5 billion. Let's go to H&M then, Guy. We've got numbers coming through there as well. Maintaining their level of investment compared to last year is a line that interested me when we're thinking a lot about CapEx right now. But fourth quarter sales have missed estimates. Clearly, this is a business that's been dealing with consumer trends as they find them in various locations. They've got this strategy, brand elevation in focus. A lot of analysts want to know what kind of headwind the dollar strength is providing to the business and how concerned they might be around tariffs. So we'll keep an eye on those themes as these lines continue to drop. And Kriti, you've got your eye on some of the tech names.
Absolutely. That I think Magnificent Seven not looking so magnificent anymore, especially after those Microsoft earnings. The cloud numbers coming in fairly weaker and dragging down the entire tech sector. You saw after hours trading as well. Tesla also seeing some weakness in the earnings. Meta, kind of the lone outperformer here, which was interesting given that they are about to make a gigantic CapEx investment in personalized AI. Even some rumors that maybe Mark Zuckerberg might be moving to Washington, D.C. as well.
OK, so there are lots to digest when it comes to the tech space, the broader earnings story out of Europe. There are many more earnings dropping this morning, and we'll get to a lot of those. The Fed conversation, Kriti, you were talking about it as you checked on the markets. No hurry seems to be the key message from the Fed. If there were a message, maybe this was a Fed that didn't really want to send a message. There was a bit of confusion over whether they were signalling something a bit more hawkish on inflation initially, but then as we got the press conference, we heard from Powell saying that wasn't supposed to be a signal, and so the market sort of wound that hawkish response back. But yeah, maybe some people are pushing back their expectations of when we get another cut from the Fed.
More information required. Needs to figure out exactly what the Trump administration is going to do. You can understand why they're in the position they're in right now. Trump pushed back quite strongly, understandably. We were anticipating that, so we saw that happen. He expects lower rates to come through. But it does seem as if the Fed is ducking and looking for cover at the moment, trying to avoid the Trump spotlight, trying to avoid the politics. It can try to make a kind of fairly balanced decision on where rates go next.
Yeah, maybe not making a repeat of that insurance cut. That was the kind of hallmark of perhaps the first term as well. We'll see if the ECB follows suit. They're up next. And whether or not maybe some of that Trump policy even shows up in the Lagarde kind of playbook, or maybe she says the same thing. We've got to wait and we have to see.
Yeah, absolutely. Meanwhile, Guy, we need to focus on the other story that we covered in the headlines around this plane crash just outside Washington.
Happening in Washington, a developing story over the last few hours. A regional jet flown by American Airlines colliding mid-air on approach with a military helicopter in Washington, D.C. Officials say recovery operations could take a number of days. John Harney is in Washington for us. John, we're looking at live pictures of the river. We're trying to understand what is happening, what has happened. What is the latest?
The rescue operation, which began almost immediately after the crash, continues on the Potomac in very challenging conditions for the for the divers and the other responders. It's still very dark, and the water is not only cold but murky. But it remains a rescue operation. The first briefing at the Reagan National Airport finished about an hour ago. Many questions, obviously, will be asked and we hope answered in the hours and days and probably weeks ahead. An investigation is underway by the military, Defense Secretary Pete Hegseth said, and of course there will be civilian investigation, other government inquiries as well. Now this occurred, of course, in the just at the dawn of the Trump administration. The Transportation Secretary, Sean Duffy, took office just on Wednesday. Pete Hegseth, the Defense Secretary, started on Sunday. So it presents a test for the new administration. This tragedy.
Certainly a tragedy, and one that we're going to keep a very, very close eye on. Bloomberg's John Harney joining us out of Washington with the latest. We thank you so much for those updates. We're going to go back to the earnings story, of course, and get updates throughout the hour. In under half an hour, we're going to be speaking to some very important names in Spanish banking. Gonzalo Gortazar, CEO of Caixabank, will be joining us, plus Carlos Torres Vila, chair of BBVA. Both exclusive interviews, both at a crucial time. We'll also get plenty of other earnings interviews from the likes of Roche, Shell, and Wizz Air, among others, throughout European and U.S. programming today.
Let's turn our attention now to one of those sets of numbers that have been dropping on our screens this morning and talk a little bit about the French pharma giant Sanofi. 2024 was the year the company pivoted away from its consumer business to become what its CEO this morning says is a fully focused, science-driven biopharma company. The stock outperformed the CAC last year, and this morning the company announced a €5 billion buyback. It also promised faster growth. We're joined now by Sanofi's CFO, Francois-Xavier Roger. Good morning, sir. Thank you very much indeed for your time. Let's talk first of all about the buyback. Some in the market had anticipated that the number would be higher than 5 billion. Why did you settle on that number?
We believe that, first of all, we had committed that we would do a sizable share buyback because it was a way to mitigate the dilution that came from the separation of Opella, our consumer care business. With this 5 billion share buyback, let's review the total amount of shareholder remuneration that we will have in the year 2025, which is actually at 10 billion because we are increasing at the same time our dividend as well. We have increased our dividend for the last 30 years as well. So we are part of these dividend aristocrats as well. So it's close to 10 billion that go back to our shareholders in 2025.
Did you talk about a bigger number? Was that on the table? Some had anticipated the number could be as high as 8 billion. I'm just wondering if a higher number was discussed.
I would not comment anywhere on the discussion, but I think that when talking to our investors over the last couple of months, we understood that there was an expectation of about 4 to 5 billion. So we believe that the amount of 5 billion is the right amount.
OK. In 2023, you surprised many people by anticipating that you were going to pick up your R&D spend, that you were going to spend more pushing forward into the science areas that you were focused on. Are we starting to see evidence of that spend coming through in these numbers? You've talked as well in the statement about faster growth coming through. Is that a direct result of that pickup that we saw a year and a bit ago?
We have raised our investment in R&D significantly last year because we increased our investment in R&D by more than 900 million. So we did exactly what we had said at the end of 2023. The very strong development that we had in sales last year, growing 11.3%, which is really a very high level in the pharmaceutical industry, is not the direct consequence of the investment in R&D that we did last year in 2024, because obviously this is a long-term investment. But clearly we were very happy as well with some readout that we have, positive readout that we had last year in 2024, such as tolebrutinib, for example, or even in phase 2 with our TL1A. So we are super excited about the outlook. We have a very strong pipeline with 12 potential blockbusters. And we had some very interesting readouts once again in 2024.
In terms of where CapEx goes in 2025, there is considerable pressure coming from the new Trump administration that particularly healthcare companies should be manufacturing in the United States. There is the possibility as well that tariffs are going to be a factor in this equation. How much pressure do you feel to manufacture more of your product in the United States? You're quite light in terms of your footprint in the US?
Because of our regional footprint in Europe, we do have a strong industrial base in Europe, obviously, but we do have a significant presence from an industrial point of view, and especially for vaccines in the US. So we are always looking at possibilities to invest further. We did decide, for example, on 3 new plants lately. None of them is in the US, but we are investing in Singapore, in Germany, in France as well. But we will always look at opportunities to invest, including in the US. I mean, we have no limitation.
Do you feel greater pressure with the arrival of the Trump administration to focus fresh investment in the United States?
We are in constant discussion with, the regulator and policymakers as well, in order to see what we can do in order to support our industrial base as well, including in the US. But I cannot comment on recent discussion that we have had.
RFK Jr. had his time on Capitol Hill yesterday, his confirmation hearing, pushed back against the idea that he is anti-vaccine. Are you convinced now that the Trump administration is not anti-vaccine? You obviously have some huge products in this space. Your RSV vaccine for infants is a huge profit driver potentially for Sanofi.
Yes, so obviously we have a strong presence in vaccines. We were, by the way, extremely happy last year to see the result of our Beyfortus vaccines for RSV for young children, where we reached 1.7 billion euro of sales in the first year of marketing, which really show as well the interest that there is among parents, for example, in that case. I mean, given that this vaccine has reduced hospitalization rate for infant in case of RSV by close to 90%. So it's really an extremely good product that succeeded extremely well last year. This is evident that vaccines are extremely relevant, for babies, but for adults, for elder people as well. And we will continue investing in vaccines.
We're going to leave it there. Thank you very much indeed for your time this morning. Sanofi's CFO, Francois-Xavier Roger. Anna.
Guy, let's turn to another part of the healthcare space, and that is Roche. We've had numbers through from the Swiss pharmaceutical giant this morning. New guidance from the business, expecting earnings per share to grow in the high single-digit range. That will outpace their expectations for sales growth. Interesting lines around R&D and, of course, M&A, never far from this business. So we'll talk about all of that with Thomas Schinecker, who's the CEO of Roche and who joins us now. Thomas, nice to speak to you. Let's start with the earnings story then and the messaging you're trying to give to the markets this morning. What should we take away from the fact that, yes, you're suggesting profit growth is going to outpace sales? You're doing that partly by keeping an eye on R&D spend. You're saying that you're holding that flat in 2025. Bring all that together. What message are you trying to communicate to the market?
Yeah, thank you very much for inviting me. Before we go into this, I just want to say that I've heard about the sad news about the accident in the US, and I want to send my condolences to the families that were impacted. Now, let me quickly go into our performance. We've had a really strong performance over the last year, but particularly over the last 3 quarters, with 9% growth in each of the quarters. And we do believe that this momentum will carry us into next year. We also mentioned that we'll grow our core operating profit faster than sales, and with it also our core EPS faster than sales. And we do that by managing our costs effectively. As you mentioned, we say that we will keep R&D broadly flat. We are reprioritizing some of our portfolio. We are making sure that our R&D is very efficient. And with that, we can invest and will invest in a number of programs that are going to move into late stage next year. In fact, we have 7 potential medicines that can move into phase 3. This would be a record for us.
OK, so that's the messaging for markets. Can I ask you about M&A? Because this, Thomas, is always something that investors want to know about. Your pharma chief recently said the company has 10 billion Swiss francs a year to spend on deals. Do you sometimes think about doing something bigger? The market's interested to know.
We always take a look at all the opportunities that are out there. And it has to make sense from a scientific perspective, and it also has to make sense from a financial perspective. And we're very diligent about that. And if you look at our track record over the last 2 years, I believe we've made very smart, very good acquisitions at a very decent price. And that's the kind of deals that you should expect going forward.
OK, so those are the things we should expect. Some people are wondering if you'll make deals in the obesity space. I know you have things under development there already. Given Novo's good data on some of its products, particularly around amycretin, do you think you need to acquire an amylin asset in order to compete in this space, Thomas? So something that acts as a hunger suppressant. Is that going to be a future path for Roche?
So we have focused on 5 therapeutic areas. Cardiovascular metabolism is one of them. And we'll keep looking at opportunities to keep improving our already very good pipeline. And we'll do that not only in that space, also in the other areas.
We were just having a conversation with the Sanofi leadership, and I wanted to ask a couple of questions about the United States along similar lines. How concerned are you about the idea of tariffs on entry into the United States market, Thomas? How much of an impact do you see this having on your business?
We actually have a very big and strong footprint in the United States. We have 25,000 employees in the United States, so more employees than we have in Germany or in Switzerland. We invested 11 billion Swiss francs over the last 10 years into manufacturing and other things. So we have a very strong manufacturing footprint there as well. In fact, we're one of the biggest taxpayers in the US. And our goal is to further invest in the US. And why do we do that? We do that because we want to build our plants close to where our markets are. And the US is a very important market for us.
OK, and Thomas, sticking with the United States, we were just asking this of Sanofi as well. Robert F. Kennedy Jr. on Capitol Hill yesterday giving testimony, playing down previously fairly anti-vaccine comments that he's made. How is his potential appointment going down with the European pharmaceutical sector?
We've actually worked very well with a number of different governments over the last years in the US. Among others, we've worked very well with the Trump administration when he had his first term during COVID-19, this pandemic. In fact, I think he praised us even twice in the media. So I believe we'll continue to work well with them. At the end, I'm convinced as a scientist that science will always prevail, and we need to do the right thing for patients. And we need to make sure that we improve the lives of patients, and that's our job.
OK, Thomas, thank you so much for your time. The Roche CEO, Thomas Schinecker, joining us there to talk about the earnings story and much beyond. Guy.
OK, Pharma, tick. We've got plenty of other things that we need to be talking about throughout the rest of the show. We're going to bring you an interview with UK Chancellor Rachel Reeves. What do we think about her growth plan? Plus a conversation with Deutsche Bank's CFO, James von Moltke. Plus, up next, we are going to be joined by Caixabank's CEO. This on the back of the firm's latest earnings. You want to join the conversation? You want to put any questions to any of our guests? You can do so on IB+, BBTV Go. This is Bloomberg.
Welcome back to the opening trade. Let's talk about one of the hottest economies in Europe right now, and that, of course, is Spain. And as a result, maybe one of the hottest banks right now really providing those services to the country. I am, of course, talking about Caixabank. Their net income beating estimates across the board here. We're looking at a $1.54 billion of euros. Estimate there was $1.45 billion. Caixa also announcing a buyback program of as high as 500 million euros. Strong numbers across the board. Let's bring in the CEO, Gonzalo Gortazar of Caixabank. And now, Gonzalo, a pleasure to have you on the program. Thank you so much for joining us this morning. Let's kick it off with these earnings. Across the board, very, very strong numbers. The analyst community already singing their praises about these numbers. But what comes next, Gonzalo? How do you beat the strong set you've put up today?
Well, as you said, we had profits coming up 20% this year. And what's, I think, even nicer is activity has picked up very strongly over the last 6 months, and particularly in the last quarter. So that sets a good tone for what may be 2025, a year in which hopefully with a booming Spanish economy up 3.2%, numbers were out yesterday in terms of GDP. With that kind of environment, we're going to be able to grow our business at faster pace than we've seen over the last few years.
Well, Gonzalo, I think Caixa has the massive benefit of not only being one of the biggest banking agencies in Spain, but also one of the biggest in Portugal as well. There's an economic conversation to be had there, and that the GDP per capita of Portugal is rising faster than that of Spain. Of course, as you know, it is certainly a concern where you are at the moment. Is that what's holding Caixabank back from really going all in or even bigger in terms of market share when it comes to Portugal?
Well, we actually have been in Portugal now for 8 years. So it's been a super successful story with BPI, and it's been growing market share, doing very well. It's now close to 20% return on tangible equity. BPI, very good cost income, below 40%. So we're actually planning to keep BPI growing organically in Portugal. We're very satisfied. Portugal is doing very well, and basically we're now operating in the two most attractive European markets, I would say, Spain and Portugal.
Very, very certainly interesting market share. But in the past, you've said that the likes of, say, a Novo Banco, for example, acquisition or even merger would not be on the table. Walk us through the logic of that as Portugal has such juicy numbers right now.
Well, I wouldn't like to comment on a specific names, but generally we have actually, as I said, a very attractive position in Portugal, and a bank that is doing very nicely on its own, standalone, growing. Any transaction, M&A, is always, on the one hand, something that could deliver synergies. On the other hand, is distraction from what is currently being done at BPI. So very happy with the current base plan, which is BPI standalone, growing fast. Obviously, that's our base case.
Gonzalo, talk to us a little bit about the Spain side of things then. I mean, we talk about these enormous numbers. You talk about this exposure to really the best performing economy in Europe at the moment. And yet, if you talk to everyday Spanish citizens, affordability is still a question for housing, for groceries, et cetera. How is that hitting your bottom line?
Well, it's a concern, I would say, not for our bottom line today, but for the future. Spain still has some structural imbalances, and obviously some of them are being tackled. Budget deficits coming down, it should come down further down the road. Housing shortage is a big issue. There's no question around that. Employment, even if unemployment is at record low levels, is still at 10.6%. So there's plenty for us to do. And what's most important is if we don't act now to tackle these imbalances, what we may see in 2026, 27 is that the current sort of faster growth finally slows down. That would be a pity. So it's a call to take action now, make sure we address those challenges that we have in Spain.
Well, it certainly hasn't shown up in your numbers just yet, but we, of course, will keep a very, very close eye on that. Gonzalo, I want to ask you a final question. This time on some corporate news in Spain broadly. Telefónica has recently had a chairman change. We know that your parent company, Criteria Caixa, also has a stake in Telefónica, in addition, of course, to Caixabank. There seems to be a change in the mood music when it comes to the corporate structure of after this chairman change. Any thoughts on that? Any concerns around how that story unfolded?
Well, I have to say it's very difficult for me to comment on other large corporates' decisions and changes in Spain. I fully respect them. I just like to say Telefónica is obviously a great company, and outgoing chairman José María Álvarez Pallete has done a great job. And Marc Mutra, the new chairman, is also someone that is very credible and has done a great job at Indra. So wishing luck, obviously, to the company and continued success. And on our side, I don't see any impact on where we are. We are actually, as you said, having a very good course, very good results, very good performance for the last few years. And hopefully we'll continue on that path for the forthcoming future.
We look forward to following that story. Gonzalo Gortazar, CEO of Caixabank, joining us on the program this morning. We thank you so much. Coming up, we're going to continue the Spanish banking conversation. We are speaking exclusively to the BBVA chair, Carlos Torres Vila, after the Spanish bank's fourth quarter net income beat. We're also talking about the Mexico story, the Sabadell deal. Plenty to digest again in this exclusive interview with the BBVA chairman. Stick with us. This is Bloomberg.
Welcome back to the programme. 30 minutes until the start of trading here in Europe. This is the opening trade. Let's have a look at the futures picture for you. We are flat to positive across European equity markets. S&P futures also pointing higher. Nasdaq futures up by 0.6%. We have a lot of tech earnings to price in over in the United States. We have the Fed, of course, to work through, at least in the European session. And so the market clearly still digesting, in the European region at least, what we heard from the Fed just yesterday, and the ECB looms large, Guy.
It certainly does. So everybody's pretty much expecting a rate cut today. They're also expecting one in March to be delivered as well. Most of the ECB commentary we've had from the Governing Council over the last few days and weeks has suggested that. The market's on board with that as an idea as well. Does Christine Lagarde actually commit to that, though, at today's press conference? Or does she take a leaf out of Powell's book and say, you know what, actually, we're going to wait, we're going to watch, we're going to see what happens? We still don't know, and it could have a big impact here in Europe as well, what Trump is going to do, what tariffs are going to look like, maybe some caution from the ECB, from Christine Lagarde. How does that go down? That'll be really interesting.
Yeah, interesting to see whether she gives any sense of where her thinking's at around future rate cuts. The market is still pricing in quite a lot of cuts, although maybe they come slower. If the Fed's on pause, do they come slower than we previously thought they would? And a lot will depend on the tariff story. And interesting to see the Fed trying to swerve all of that. Other central banks perhaps, giving us clues to how the thinking is going. We heard from the Bank of Canada reflecting on the impact that that could have. Quite a serious impact, of course, if things that are threatened are imposed.
Yeah, and certainly this is going to be, you mentioned the Canada piece, the Mexico piece is certainly important as well. The read-through into some of the European companies that have actively traded on it is fascinating. We'll talk about one of those companies now. BBVA, of course, the stock price has swung every time we get that kind of tariff threat, or even some of the interest rate stories out of the ECB there as well. They come out with numbers this morning that were incredibly strong. The fourth quarter net income beating in a very big way, 2.43 billion euros. The estimate there was about 2.3 billion. They're also announcing a 993 million euro buyback program, in addition to still pursuing Sabadell, one of the biggest takeover deals in Europe at the moment. Let's get right to the chair of BBVA. I'm pleased to say I'm joined by Carlos Torres Vila this morning to talk about not only the strong numbers, but a little bit about what's going with the company. Carlos, thank you so much for joining us this morning. Let's start with these numbers, though. I mean, these are some blowout numbers in terms of the success that you're seeing, not just in Spain, but in terms of Mexico and some of your other businesses as well. Walk us through how you beat this, given that your ROTE is still very much expected to stay fairly the same from 2024. How do you grow from here, Carlos?
Well, first, thank you for having me. As you say, the numbers are excellent numbers. We closed a fantastic year and a fantastic five-year strategic cycle, beating all of the metrics that we had set for ourselves and that we had made public. So it's the 10 billion net profit for 2024 with a growth of 28% in earnings per share. The dividend, 70 cents per share, with high growth there as well, 27% growth in the dividend. And then the 993 million buyback program, which is big news given that we were restricted of doing buybacks, and now we can proceed quite soon to perform that almost 1 billion buyback program. We have a unique combination of growth and return. We are the bank among our peers that has the best growth profile, 14% growth in net loans. So that gives you the answer to the question as how we're going to continue to grow the bank. Well, we are present in economies like Spain, which is the fastest growing in Europe. We grew 4% the loan book in Spain last year. It's going to continue to grow into this year. Same we're present in Mexico. Mexico is set to profit from the nearshoring phenomenon. We had a 16% growth in loans in Mexico last year, and it will continue to have high growth, high single-digit growth this year. So that combination of growth with return, as you said, we have 20%, almost 20% return on tangible equity, and that combination of growth and return makes us quite unique.
Carlos, you mentioned the Mexico business. We should inform our global audience that almost half of BBVA's profits come from Mexico itself. But every time we see a tariff headline cross the Bloomberg terminal, BBVA stock tends to see the most volatility because of that exposure. There's a concern that as soon as this weekend, we're going to get 25% tariffs from the U.S. onto Mexico. How does that impact your Mexico business?
Structurally, Mexico is set to profit from what's happening in the world. The trade wars, the confrontation, and the fact that the U.S. Is behaving the way it is. The U.S. needs Mexico. It needs Mexico for competitiveness. Mexico's labor cost is a fraction of the labor cost in the U.S. The two economies are already very intertwined. So Mexico is the #1 trading partner of the U.S. The goods cross the border multiple times before they are finished. And really, for the U.S., Mexico is a source of competitiveness. You have a large labor force, very competitive. And what we're seeing is high appetite for investing in Mexico. So no matter what happens with the rhetoric, even with the tariffs themselves, Mexico will continue to be extremely competitive. So you also have availability of clean energy in Mexico. So it has all the factors to continue to succeed over the next decade. And as you correctly say, Mexico is a very important part of our business. We have the largest bank in Mexico with a very large market share, with a growing market share. And we have experienced, even with all the volatility in the headlines, what we have experienced is high growth of our loan book. Credit penetration continues to be quite low, 35% private credit over GDP, which is half of what you have in other countries like Brazil. So there's also another growth lever in increased credit penetration. So things are looking quite good in Mexico.
Well, Carlos, are you preparing for that announcement? Do you think it'll come this weekend, the 25% tariffs on Mexico?
Who knows? The news change almost every day, and we see all sorts of headlines. But as I say, it doesn't really affect much structurally, because Mexico, with tariffs, without tariffs, will continue to be essential for the U.S. I think the focus of the U.S. policy regarding Mexico is on the border issues more than trade itself. As I say, trade is essential for both countries. But the border issues, I mean immigration and the drug traffic, so the fentanyl issue. And those two issues, both governments are working together to tackle them. And I'm confident they will make progress.
Well, I think you might be the sole wolf, or the lone wolf, I should say, on that kind of optimism. Carlos, thank you for that. Let's talk a little bit about another major thing impacting the stock, in addition to Mexico, and that, of course, is the Sabadell deal as well. The last time we spoke, you said that the biggest enemy to this deal is time. And we have had plenty of time, plenty of changes in terms of some of the regulation, even Sabadell making kind of a last-minute bid to move their legal base back to Catalonia. Carlos, walk us through this story. Is this deal still unstoppable?
Yeah, the change to Catalonia doesn't change anything. And the deal is now much closer to completion. So time has progressed. And yes, there has been quite a few months. But as we have seen, the strong results we have presented, if anything, makes our offer more attractive, given our strong performance. So we presented a knockout offer back in May with a 50% premium over the trading price of the 3 months prior, 30% premium on the day, on the unaffected price, the day before we announced that bid. And if you compare that sort of premium with what we have seen subsequently in other deals, it's extremely attractive. It's an unbeatable offer. And we are now close, a few weeks away from competition authority approval here in Spain, which will be then opening the door for the acceptance period for the Sabadell shareholders to make the decision. If we look at the way the stocks are trading, clearly Sabadell's share price is very supported by the offer we have presented. So we are extremely confident that this will go through.
Give us a timeline on that. You said a few weeks away from approval from the competition. When do you think you can close the deal altogether?
Well, as I say, a few weeks away from competition authority. Of course, it's their decision, so we will have to see. But we think it'll be a few weeks from now. And then we have the acceptance period, which in Spain lasts between 30 to 70 days. So depending on circumstance, we can choose how long that could be, 30 to 70 days after the acceptance period begins.
Carlos, I want to talk about another big corporate change in the sphere of Spain. BBVA has a 4% stake in Telefonica. We do know that there has been a fairly controversial chairman change at the leadership. There have been reports that the Spanish government made that change very last minute. Carlos, were you informed about that deal? Did you have an opinion on it? Can you just walk us through the logic of that leadership change, given that BBVA, like I said, not only is a shareholder, but a board seat member as well?
Yes, we have been long-standing shareholders of Telefonica for 25 years, very loyal to the company, sticking to that. Of course, it's a non-strategic stake. because we are a bank and it's more of a financial stake. And the reason we own it is because we see value in Telefónica going forward, as we have seen, and we have supported the company. And to your question, this was a decision by the shareholders, several of the shareholders with significant stakes, including, of course, the government, who recently acquired a significant stake. We had conversations among shareholders. We had conversations also with the chairman of Telefónica, and we jointly agreed that this would be good for the company for the next stage, acknowledging that the prior chairman, José María Álvarez Pallete, had done a fantastic job, and we are full of gratitude for his leadership at the front of the company. But it's also time to move on to a new stage.
All right. Carlos Torres Vila, the BBVA chairman, we thank you so much for your time. Walking us through the earnings, the Mexico story, the Sabadell bit, and a little bit of Telefónica as well. Guy.
We're going to turn our attention to what is happening in the oil industry next. Shell announcing a $3.5 billion share buyback this morning. This after reporting fourth quarter profits that look like they've missed analyst estimates. We are going to find out what is going on. The CEO is going to join us next. This is Bloomberg.
Welcome back. This is the opening trade, 7:44 here in London, and this is the picture across European equity markets as we are around 16 minutes from the start of the opening trade. We see a bit of positivity coming through on some of these markets. Euro Stoxx 600 up by 0.5% in terms of the futures market this morning. Let us get to some earnings stories this morning. We've had confirmation of maintenance of a buyback from Shell. We've had perhaps some disappointment around the adjusted profit line, at least not what some analysts have been expecting. Let's speak to Shell CEO right now. That is Wael, who joins us for a conversation this morning about these numbers. Wael, thank you very much for speaking to us. Let me start with the adjusted profit and the numbers you reported then on that front this morning. Digging into the release a little bit, you attribute this to a number of items, lower prices and margins, some write-offs, and then there's some items around trading, LNG trading, for example. How much of this is to do with the trading business? And this matters for investors because that's quite unpredictable, and they'll want to have a sense of whether missing the estimates is something they should get used to, if these effects are going to sustain.
Thanks, Anna. Firstly, the earnings at $3.7 billion was indeed a bit softer because of some of the non-cash items that came through. But cash was very strong, again, $13.2 billion this quarter. And on an annual basis, it's been a tremendous year for us. Some $55 billion of cash flow from operations. It's the second highest year that we've ever had. Helped, of course, by a significant amount of transformation that we're making in the company. $3 billion of structural costs out over the last couple of years. Capital discipline, we took out some $3 billion of capital compared to the year before. And all while driving operational performance forward. So what you find is the consistency and the predictability of our cash generation has actually underpinned our ability to distribute now 13 quarters in a row of $3+ billion of buybacks. And that has been at the heart of what we have been trying to achieve.
Yes, I still wonder, though, whether... So from that list of non-cash items that you referenced, Wael, how many of those do investors need to keep in mind for the first quarter, the second quarter and going forward? Or do we just disregard them as not significant for 2025?
I think the well write-offs, of course, the non-cash element of well write-offs is just part of the normal business. A part of the lower earnings comes from the lower commodity prices and lower margins. And then a part of that comes from, in particular in our LNG business, some of the hedging contracts expiring. And those were contracts that we had taken out in 22 and 2023, which essentially is a form of prudent risk management to make sure that if supplies are not there in 2025, as in now, that we would not be squeezed in the market. And so typically what happens is you settle those contracts on a regular basis through variation margining, and therefore it is not a cash item. Even going forward into 2025, it essentially plays into the earnings. And so I think what is key is the cash stability and the cash predictability as we apply a prudent risk management approach to our entire organization.
Well, this morning, it's Guy. Good morning. Thank you very much. Let's talk a little bit about the buyback. Looks like you've supported that with extra borrowing. Is that a one-off, or is that something we're going to see again?
I think to clarify, there's been no extra borrowing. So what's happened is year-on-year basis, our overall net debt has come down. If you compare it to Q3, the bump up actually that you see is attributable to the addition of some major lease contracts, in particular in our case the LNG Canada lease, which is a material lease. But on a net debt excluding leases, we are almost flat at some $10 billion of net debt, which is the lowest that we have seen in at least in the last 10 years. And so on a non-lease basis, what you see is we continue to bring down our overall net debt. We're down from $44 billion in 2023 to now, end of 2024, we get to $39 billion.
Is CapEx going to be less than $22 billion this year?
The range that we had guided to last year for 2025 was $22 to $25 billion. And what we are guiding towards today is a lower range. We're not giving it a specific number, but we will disclose the new range in Capital Markets Day 2025, which is coming up in 2 months' time. And that the reason we do that is at least we will then be able to give our investors a clearer picture of the next few years and how 2025 will fit into that context.
Can you give us just a little bit of detail on that now? The market is very keen to get information surrounding what CapEx looks like. Is your expectation that it will be the bottom end of that range, that is where you are targeting? Do you want this number to be lower?
What you've seen us do over the last few years as we exercise capital discipline is to really bring our organic capital to the lower end of that range, and that's what we're trying to do. And then we have put a very high bar on acquisitions. And so you'll see in 2024, compared to the last 3-4 years before that, we have not had a lot of inorganic acquisitions. And the reason for that is it's consistent with what we have said. We will preferentially allocate surplus capital towards buyback to take advantage of the opportunity that we see a material underappreciation of the cash flow stream that we see ahead of us. And therefore, our share price is one that is attractive to invest in particular, given the risk profile of what we see and what we know is coming down the line. And so we have made sure that we continue to lean into those buybacks as a preferential mechanism, which is why you've seen us come indeed to the lower end of that range.
It's Kriti in London. I want to ask you about some of the maybe risks you see coming down the pike. There's a big question of deregulation, of course, in the state and maybe an increased amount of energy spending, energy infrastructure spending as well. Can you just walk us a little bit through what that looks like, especially at a time when some of your peers like Chevron, Exxon, for example, are going big in terms of investment in the state, as well as things like natural gas-fired power plants. Is that something that's on Shell's agenda?
It is. So, of course, we play very heavily in the overall gas market. We are the largest international energy company in the LNG space, and we continue to build off that. So by 2030, we expect to have grown the LNG business, the liquefied natural gas business, by some 20 to 30%. And just recently, for example, we acquired a natural gas based power plant in Rhode Island in the US, some 600 megawatts. We're one of the largest gas and power traders in the US, and we have a very strong platform there for solar energy called Savion. So we're very much involved in that space, developing quite a lot of capacity, and we are working with customers, in particular in the tech space, I would say, data centers and the like, to be able to support them as they look for reliable energy, of which there is a combination both of renewable energy, but also supported by both battery storage as well as gas. And we at Shell are very much at the center of that, in particular in the US at the moment.
Well, let's talk about the other role that the U.S. may play in global gas markets, and that's their approach specifically to Russia. There's a thought here that Donald Trump may be able to usher in an end to the war in Ukraine and perhaps a different relationship with Russia than we've seen in the last 4 years or so. How does that affect Shell's business? Is that something you're actively planning for?
It's fair to say that in 2025, we are expecting the unexpected. It is a year of volatility and uncertainty. I mean, we are keeping an eye on what might happen from a sanctions perspective, what might happen from a tariff perspective, the inflationary pressure we're seeing, the response of the Chinese economy. All of it is influencing what is a foggy picture ahead for 2025. So we focus on what we can control. There's a lot we can't control, and some of the elements you mentioned we can't control. And so what we can control is to continue to build resilience in the company, have a strong balance sheet, make sure that we are delivering our A game when it comes to operational performance, dialing down our spend to be able to be resilient to any shocks that come to the broader economic system, and being in a position to be able to create value through what is inevitably a cyclical industry and a cyclical economy. And that's what we can control, and that's what we focus on.
Well, we're going to leave it there. Thank you very much indeed. Wael Sawan, the CEO of Shell, announcing numbers this morning and a buyback. Thank you very much indeed for your time. We've run you through already a significant number of the earnings that have dropped onto the Bloomberg terminal this morning. There are a few others. Swatch may be one that stands out this morning as well. But we're getting a pretty good guide from our CEOs this morning, CFOs, as to what is happening out there in the world, how they're dealing with it and how they're navigating, particularly Trump.
Absolutely, yeah. A lot of lines on the US and thoughts there. A quick focus on Deutsche Bank, because we could see some movement in their shares. See, the pre-tax profit number missed estimates. They're also talking about higher costs. They're talking confidently about 2025, but in terms of the backward-looking numbers, maybe some disappointment in the markets, Kriti.
Yeah, it's a really interesting one, and I think we're going to see some big trading moves, especially in the banking space. We still have to factor in the consolidation story, and it feels like it's taken a back seat, of course, to a lot of the Trump impact.
We're hoping in the next hour we're going to be speaking to the Chancellor, Rachel Reeves. In the next couple of hours, we'll definitely have that conversation. We are 5 minutes away from the market open. This is Bloomberg. Thursday morning, good morning. There is an awful lot to price into the market this morning. You've got the Fed to focus on. We've got the ECB coming up a little bit later on. There are huge numbers of earnings that we need to focus on as well. We saw the big tech earnings coming out of the United States last night. They're going to have an impact on Europe this morning, plus also a huge array of European earnings that Anna will talk about in just a second. In terms of the trade coming out of the yesterday session and how it's going to impact Europe this morning, I'm not sure there's a kind of clear, obvious narrative. A lot of the action, Kriti, happened after the bell. Those big tech earnings, absolutely pivotal.
Pivotal, and yet perhaps boosting a little bit of risk sentiment. You're seeing it in U.S. futures. You're certainly seeing it in European futures as well. Eurostoxx 50 futures, the outperforming here, higher by 0.5%. The FTSE 100 is flat at the moment. It is the underperformer across Europe, and even the French index is outperforming this morning, higher by 0.4%.
And Kriti, let's talk about some of those individual stocks that could be on the move this morning that Guy was referencing. The banking sector certainly in focus with Deutsche Bank. That one could drop at the open. The numbers for the fourth quarter, the pre-tax profit, seem to miss the estimates. Higher costs are concerned there, and yes, they're talking positively about 2025, but there is that focus on the cost. We'll think about Shell as well. That one could be on the move this morning. Q4 adjusted profit lagging estimates. Very keen, the CEO, to point out that this is all to do with non-cash items and downplaying any link between maintaining the buyback and the debt profile. But certainly a lot to think about when it comes to Shell, so we'll have one eye on what that one does at the start of trade as well. Wizz Air certainly in focus as well. They're cutting their income guidance. That was kind of expected. Some had expected them to come through with that, and they do see unit cost pressures, so we'll certainly take a look and see if that one trades at all weaker at the start of trade, Guy.
Absolutely. Pratt & Whitney engine issues affecting Wizz this morning. So let's talk about the broader market. As I say, we've got an awful lot to fold in to the narrative this morning. Could take a little while to settle things out. Here we go. It's time for the opening trade. Let's look at some numbers. FTSE 100 out of the gate, up a little bit. We'll see how Shell trades this morning. That could be really pivotal to the London market. A huge heavyweight in terms of the operations we see there. Keep an eye on the pharma sector as well. Roche and Sanofi out with numbers too. The banking story, Kriti's been bringing us that this morning. There's an awful lot going on. The IBEX is up by 0.5%, circa 0.5% already. Let's see how the CAC trades. Remember, we have had numbers out from Swatch this morning. They don't look particularly solid. That stock cooled down. Is that going to have an impact on the luxury space? But the CAC is up by 0.4%. Politics, another factor for that market to think about as well. We've got the DAX this morning to focus on too. We've got the SMI to think about in terms of some of the drug trades that we're watching so carefully. An awful lot to factor into these markets. But broadly, Europe is higher this morning. What are we seeing below the surface? What's going on?
Yeah, Guy, we are about a minute into the trading session, and what I'm seeing on my screen is kind of shocking and surprising here. Tech is, of course, leading the charge here from an index contribution perspective. I'm looking at ASML, I'm looking at Schneider, and then your third biggest index contributor is BBVA out of Spain. And that's not really a combination you see very often. Europe's big tech next to Europe's big banks, basically. On the downside, though, it looks like healthcare not having the best of days. Telecom also on the back foot. The sector as a whole down about 0.2%. Anna.
It's a fast-moving market this morning. So tech, as you say, Kriti, is strong. Media also pretty strong, actually just taking that top spot as the best performing sector this morning. We have Universal Music Group up by just shy of 2% within that particular sector. To the downside, retail is down by 0.5%. I'm looking for H&M, and there it is, down by 4.4% in this morning's session. So the numbers perhaps looked a little mixed at first glance, but certainly something disappointed the markets about the numbers that H&M put forward this morning. I'm just looking for any of the other individual names.
Shell is flat. Shell's not actually doing anything this morning, which is interesting. It does seem as if it's actually, on balance, being taken as expected by the market. The buyback, obviously, a big contributing factor around that. Looks like maybe actually the debt pickup isn't something the market is going to focus on. And as we've already indicated, really hard to model the trading business at Shell. So some volatility, a bit like investment banks, some volatility around trading when it comes to what we're seeing with the Shell numbers. So the market seems to be moving past that.
Yeah, the market does. In terms of the market's response to Deutsche Bank, those numbers look to be negative. So down by 4.3% right now on the back of that miss on fourth quarter pre-tax profit. We'll be playing a little bit more of our conversation with the leadership team over at Deutsche Bank a little bit later on this half hour. Let's go back to the macro themes, though. There are plenty of them from yesterday and today hanging over markets. Fed Chair Jerome Powell made clear the central bank intends to hold interest rates steady, citing uncertainty around the new U.S. administration's policy agenda.
We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be.
Let's talk to Jean Boivin, who's the BlackRock Investment Institute head and joins us here on set this morning. A busy morning, Jean. Thank you for joining us. Plenty of earnings to talk about. We'll get to those and the sectors on the move. But thinking about the macro picture, the big takeaway from Powell then seemed to be, the pause is in and they're not in any hurry to deliver another cut. Would that be the right interpretation?
Yes, it is the right interpretation in our view, but I think the bigger picture point is if you just think about where we were in September, with the hurry to cut rates with 50 basis points and signaling the beginning of an easing cycle, very aggressive easing cycle, markets went with expecting many, many cuts. And now we are here after 3 cuts on hold. I think it confirms our general view that this is an environment that is not a cycle. This is not about recession risk. Yeah. It's really about a recalibration of rates, and who knows what's going to happen next.
Yeah, well, in September, if we were expecting many cuts, the market moved a long way on the Trump victory, of course, and kind of front running the hold from the Fed. We saw rates on the rise as lots of people looked at the policy proposals from Trump and thought, well, a lot of these might be inflationary. So in that sense, are we out of kilter, the market and the Fed, or is the Fed just caught up with the market's expectations, maybe?
I would say both the markets and the Fed have caught up with the reality that this is a different environment that's going to require higher rates for longer. And so both have been moving over the last few months, and it's pretty remarkable when you think about now the debate is between 0 to maybe up to 2 cuts this year for the entire year. This is a pretty narrow range of views that we have right now compared to many more cuts we would be expecting, and you contrast that with the alleged uncertainty we're facing around the administration policy. So there's a disconnect there between how certain we are about the fewer number of cuts versus the large amount of uncertainty.
Jean, I was almost shocked by every time we get some sort of I don't want to say hawkish, but maybe not as dovish messaging from the Federal Reserve, the stock market takes it pretty badly, despite the fact that economic resilience, earnings, savings, deregulation are all kind of tailwinds for the U.S. economy. Why are stocks so sensitive to rate pricing if everything else is going in their favor?
I think there's a couple, I would say 2 broad reasons. One is that I think the growth landscape, the strong growth has already been taken on board by markets. There might have been hope that we get this growth continuing with a low rate combination, so that resetting is net negative in the near term for markets. But I would think also the other reason is that the playbook for the last 20 years has been when rates are surprising on the upside, you get an adjustment downside for rates, for earnings and equities, whereas we don't think this is actually the right frame for this environment. This is going to be a tug of war between growth and rates. But the growth backdrop is very strong, so markets are doubting in the near term, but ultimately they get on board with it. And the net effect is pretty positive, even as we've reset to higher rates.
We're less than 48 hours away from February 1st, which is the kind of arbitrary date set by the Trump administration of when 25% of tariffs might show up on Canada and Mexico. Every time we see the headlines, European stocks that have that exposure start to trade. Is that something that needs to be priced in more significantly?
Well, I genuinely think we don't know what's going to happen on the trade landscape, right? There's a lot of noise that's going to happen. We still need to figure out, like, is it going to be really about tariffs? Is it going to be tariffs that's going to be implemented, and how broad-based will they be implemented? Or is it really we're in a negotiation where tariffs are being used as a credible threat, but a threat? I think we got some signal yesterday in the testimony that suggests that like the negotiation aspect of it is real. So I think it's too early to know exactly how negative that's going to be.
I think you're in the consensus in that take, and that there was so much volatility in the first administration. The wait-and-see approach is what everyone's adopting. Does that set the stage for a bigger market dislocation, though, a bigger shock to the system?
Well, for sure. I mean, if we do end up with like broad-based tariffs and very aggressive, trade policies, that's not the way the market is being set up right now. So yes, if that happens, there's going to be a shock to markets. But again, I don't think it would be advisable to position for that kind of a very bad scenario, given there are many reasons for or room for negotiation, and also I think this administration will rate itself about how the market is performing as well. So I don't think this is going to be ignored if it was to be an adverse reaction.
Microsoft, Meta, Tesla out with numbers last night. Too early to get out of big tech?
I think it's too early to get out of big tech. I think we are very much believing that this AI transformation is a mega force. It's playing out. Actually, the news this week, I think, is an acceleration, if it's true, is an acceleration of this AI transformation. Adoption could be faster. Who will be the winners?
Where does the value lie? Where does the value ultimately lie? Is it with NVIDIA? Is it with the rest of the economy?
It's the biggest question to navigate, which is why I don't think this is something that you just go and go on autopilot and navigating this.
But at some point, you've got to. The effect is going to be felt elsewhere, and there'll be value, because the rest of you've got big tech up here, you've got the rest of the stock story down here. Kind of, how does that even out? When does that even out?
Yeah, so that's going to be the big question. I think for now, we still believe that a lot of the value is going to be in the build-out of this AI, and that's about the big tech right now. And despite the wobbles this week, we still think that has more to go. Eventually, it's going to broaden out, but we'll need to see a bit more evidence of adoption and real value creation happening. So I don't think we're there completely yet.
So waiting for more evidence of the value creation in the real world. What about European stocks then, Jean? Because it's sometimes difficult to read all of the tech themes into Europe. Of course, Europe's tech names do move on some of these news lines. But what about the European stock market and European agenda? Do you see opportunities there? Some parts of Europe have done well on the electrification and grid transformation themes. Those seem to be perhaps vulnerable right now with Trump in the White House once again. So how does Europe do in that context?
So we think this environment is one where it's not about like the macro view and how we translate that to European market or U.S. market. It's really more about these mega forces, AI, there's the geopolitical rewiring that is happening, there's the energy transition, and it's really about mapping that into those regions. It turns out that the U.S. is more favorably positioned for many of these mega force AI. So then when it comes to Europe, not excited on the macro environment, not excited on the policy landscape. So it's really about like where do you see the AI story, the tech story, having pockets of bright light in Europe. So broadly speaking, we're not excited about the European market, so we're going to be looking for where AI is actually playing out there.
US exceptionalism story it seems to be kind of writ large across what you're saying this morning. Given the strong growth we're seeing in the United States, what do you think? Fed, next move, cut or hike?
I think next move is on hold. I think they were pretty clear about
after that. At some point, they're going to make a decision after that.
The next move, I think it's going to be interesting to see how we get to the point where the possibility of hike is actually taken seriously by market. And I personally don't rule that out. What I was saying before, extremely narrow range of views right now that 0 to 2 cuts. Yeah. I think it should include some potential hike as well. And so, yeah, I think don't rule out a hike as a next move. Not the most likely, but not ruled out.
But increasing as a possibility.
Yeah.
OK, Jean, great to see you. Thanks very much, Steve, for stopping by to see us. Jean Boivin, BlackRock Investment Institute head. Thank you very much indeed. Let's take a look at the core six, figure out what is happening across Europe this morning. Obviously, a lot of moving parts, a lot of single stocks on the move this morning. It's interesting, LVMH is higher, despite the fact that actually the Swatch numbers this morning didn't look great. ASML also continuing the bounce back, as does Schneider in the data center space. Safety maybe a little bit more on offer this morning. Nestle and Novo both backtracking a little bit. The pharma space and the staple space under a little bit of pressure. Let's watch out. Let's figure out what else we should be watching this morning. Joe has the details there.
So Deutsche Bank is the clear decliner among the financials of the reported results this morning. That one falling around 5% over in Frankfurt this morning. It's the rising cost weighing on the stock despite all that extra cash that they're making from selling more bonds and more currency strategies as well. In terms of the ones going higher, BBVA moving up, €1 billion buyback from the Spanish lender, and also a read-through in Sabadell with the company talking about potentially that bid for the rival a couple of weeks away in terms of regulatory approval, so a bit of a boost for that one. You mentioned Swatch there, Guy, and that one really hammered today. We're down 7%. Almost for Swatch. Now, there has been a bit of short interest coming into the stock, and it does look like weakness from China. A 75% drop in profit in the last year, according to the company. All that linked to China, according to the firm there. Then in terms of H&M, another one weakening. Now, the margins look pretty strong on that one, but analysts saying that the sales not improving as much despite a big ramp up in their marketing spending. So that is a disappointment on H&M this morning. Another one getting hit over in the chip space this time is ST Micro. Now, they had some weakness. This is all related to the smartphone and also PC outlook, not so much exposure to AI and the machinery sector. This is more the actual chips themselves. So therefore, ST Micro coming down 5%, trading in Italy and France for that one. Wizz Air yet again slammed. Now, a lot of this is linked to the delays on some of their deliveries from Airbus. Of course, the production issues there, but that stock, it's lost around half its value over the past year or so. They have faced some competition in pricing for Wizz as well. So that one hit once again. But we'll finish on a positive note. It's nearly Friday, nearly time for a gin and tonic. Fevertree up 18% as Molson Coors in the US takes an 8.5% stake in the UK company. They're going to start selling more of the Fevertree products over in the US. It's the gin and tonic mixers. Fevertree jumping 18% on the AIM market in London this morning.
Thank you very much for that, Joe Easton, with all the news about gin and tonics you need this morning. And boy, it's been a busy morning. Some Fevertree news. Those shares really flying on the back of that corporate activity, the Molson Coors partnership. But in terms of the overall stocks that are in focus this morning, we've talked a bit about the banks. I mean, that Deutsche Bank news, we will play our conversation with the management shortly, but that does seem to be hitting the markets with a thud this morning.
It's interesting, you got basically the German banks on one side and the Spanish banks on the other.
Yeah.
In some ways reflecting, in some ways reflecting the reality of what you see on the ground. Yeah. Germany's struggling, Deutsche is struggling, the Spanish banks doing really well. The underlying sort of economic story kind of does have an effect, and the reality of that is important.
And as the UK struggles to find its growth, drivers and growth dynamics, I was looking at this Bloomberg Economics analysis yesterday about the Spanish economy, saying, yes, sure, there's been population growth and there's tourism, but also there have been productivity gains in Spain. So, there's a lot to be applauded, I suppose, around the Spanish eco-narrative at this point.
There's an immigration story as well that's been boosting those numbers. I thought it's interesting the approach the Spanish banks are taking to the UK right now is really fascinating. There have been reports in the last couple of weeks that Santander is thinking about leaving the UK and trying to maybe find another mix there. BBVA is doing the exact opposite. They're investing more. They're buying more and hiring more talent in the UK because they're trying to bring out their investment banking presence. They think London is the place to do it.
That's interesting. A Eurozone bank looking to London, maybe to build its IB bank out. OK, We're going to get back to this banking story and dig into the German side of it in just a moment. Deutsche Bank says it plans to cut management layers and it's on an effort to roll out a big bid to boost efficiency. The numbers have not gone down well this morning. We're going to hear from CFO James von Moltke very shortly. And later in the programme, we're anticipating that we're going to hear from the UK Chancellor of the Exchequer, Rachel Reeves. A growth conversation with the Chancellor coming up. You don't want to miss it. This is Bloomberg. Welcome back. European equities are open and mixed. Actually, at an index level, you're not seeing much movement, but I can tell you at a single stock level, you certainly are. Let's talk about Deutsche Bank. The shares are under significant pressure this morning. The banking sector in Europe, absolutely fascinating this morning. Deutsche reflecting Germany, maybe. The stock down 6.1%. Ollie Crook caught up with the bank's CFO. Let's hear what he had to say about these numbers.
All of the businesses were up, rates, credit, FX, and emerging markets. So really broad-based strength in a market that where there was a lot of movement, frankly. The geopolitical events, sort of shifts in economic tides, rate changes, all of those things were playing through. And to your question, yes, certainly the first few weeks of the year have demonstrated a continuation of those trends from the fourth quarter. So we're encouraged by that. And what you're seeing is sort of in the markets a fair amount of trading, given how much the news flow sort of affects markets on a day-by-day basis, but also a degree of confidence now in corporate boardrooms with financial sponsors to position for activity this year, given a rate decline. So we're in the part of the rate cycle where money is becoming a little bit less expensive. But also, I think, more confidence about the growth prospects, particularly in the United States, but not only.
Right, and also I was also noticing that some of your competitors also did very, very well in FIC, and you know, so Goldman Sachs and Morgan Stanley, I think, up 35%. Are you at sort of risk of falling behind? How do you maintain that momentum? How do you build out that structure to continue to grow at that pace?
Sure. Well, we have been investing quite steadily and continuously. So what you're seeing is a steady recovery or gaining of market share. We have investments that are still to come on stream, if you like, in 2025. So no reason why we should change that trajectory. And also, by the way, one quirk of it, if you look at the 2-year performance, you also get a good sense of gained market share and sustained in 24. So we're really encouraged by what we're seeing in our FIC markets business.
And you've got the figure for the buyback, $750 million likely to be distributed. Is that right? In about the first half of the year? Is that?
Yeah, it may spill into sort of volume into the third quarter, but $750 million of a buyback, $2.1 billion of total distributions announced today.
And what are you looking at in the sort of back half of the year? You said that large target of $8 billion through 2025. Are you going to exceed that, and by how much?
Well, look, we're always going to be prudent as a management team on distributions and be ready to potentially seek another buyback when we can see where we are operating through the year. So there are some good reasons, we think, to have asked for and received the $750 million. CRR3 is new. Our economic development is still uncertain. Impact of tariffs in Germany. So some reasons to hold back, but we think that at 13.8 of a common equity tier 1 ratio, and with our outlook in terms of earnings and performance this year, we think we'll be in a comfortable place by the end of the year.
James von Moltke, the CFO of Deutsche Bank, speaking to Bloomberg's Ollie Crook.
Let's talk about another sector here, from banking to technology. It was a mixed bag of earnings on the U.S. tech front. Let's just walk you through it. Microsoft shares fell after it warned growth of its cloud computing business being hampered by a shortage of data centers. Not something you hear every day. Tesla, on the other hand, shares higher. Their earnings, though, missing forecast. CEO Elon Musk announcing plans to begin robo-taxi operations in June has also forecasted a, quote, epic period of growth. An interesting word choice there. And meanwhile, Meta, kind of the sole outperformer here. They're saying sales in the current quarter fell short of estimates, but the extended trading session showed some good news after the CEO outlined some pretty bold AI plans.
This is going to be a really big year. I know it always feels like every year is a big year, but more than usual, it feels like the trajectory for most of our long-term initiatives is going to be a lot clearer by the end of this year. In AI, I expect that this is going to be the year when a highly intelligent and personalized AI assistant reaches more than 1 billion people, and I expect Meta AI to be that leading AI assistant.
All right, so going big on AI out of Meta, but maybe not so great earnings everywhere else. Matt Bloxham, senior tech analyst for Bloomberg Intelligence, joins us this morning and has the distinct pleasure of sorting through all of it. Matt, what stood out to you? Was it really just the burden of proof that maybe DeepSeek wasn't as consequential as the markets thought on Monday?
To some extent, I think for me it's kind of what you just said, that the contrasting share price reactions for Microsoft versus Meta and Tesla, when the underlying story and opportunity is essentially the same. And I think it was about the narrative that CEOs choose to take. So with Tesla and Meta, you saw very much, don't look so much at the near term, look at all these amazing midterm things we're doing and look at how well positioned for that. Whereas, as you said, with Microsoft, they talked about some of the headwinds of data center supply constraints, which is affecting their revenue growth. I mean, let's put that in context. Their cloud revenue was still up over 30%, and they're still expecting to grow at a similar pace. 30% growth is what most CEOs would bite your hand off for. So, it's a problem, but it's not that big a problem. And everybody has issues about bringing data center capacity on the stream. So it was more about this choice of narrative that stood out for me, to be honest.
Matt, we saw at the beginning of the week the market was quite discerning between different US tech when it comes to DeepSeek. So quite quickly getting its head around the idea that this would be pretty bad for some businesses, if true, and not so damaging for others, or even positive. What did we hear on DeepSeek yesterday?
So Meta and Microsoft both made quite complimentary comments about DeepSeek, and to me, they're both companies that could benefit from the DeepSeek-style innovations of kind of lower-cost AI. Meta said that the novel innovations are something they'll look to emulate in their own large language models and products. And ultimately, it could bring down that 60 to 65 billion they're going to spend on capex this year. Maybe it won't affect 2025 numbers so much, but maybe I think people are still thinking that maybe Meta's not going to have to continue to spend as much as they're currently saying. Similar story for Microsoft, that these innovations are good. They can integrate DeepSeek into their offerings to their customers to give a fuller breadth of service. I think for me, the opportunity with DeepSeek is that maybe it stimulates faster Gen AI adoption, so you kind of get a trade-off of kind of less expensive chips, but more volume.
Just in 10, 20 seconds, did Musk do a great job of diverting attention away from the numbers yesterday?
He did. But you wouldn't expect any less, would you? I mean, it's the same narrative.
How bad were the numbers?
They were not very good at all for the car business.
Yeah.
But obviously people are thinking about Tesla not really as a car business, but as an AI robotics software business. And I think that's come...
AI spreading out, cheaper AI, make that better? Easier?
To some degree, yes. And I think the whole DeepSeek narrative has kind of helped the Tesla bulls to show, this is just a stimulation of everything this company is really about.
And it's an environmental credits business as well. That also stood out.
That definitely stood out. Matt, great stuff. Thank you very much indeed. Matt Bloxham, senior tech analyst for Bloomberg Intelligence. Coming up, the ECB is expected to cut by 25 bips today. We're going to take you live to Frankfurt for a preview. That's next. This is Bloomberg.
Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. Longer-term inflation expectations appear to remain well anchored. With our policy stance significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. Right now, we feel like we're in a very good place. Policy is well positioned. The economy is in quite a good place, actually.
That was the Fed Chair Jay Powell signalling the central bank is on hold for now as President Trump's economic policies take shape. Let's go from the Fed to the ECB over to Frankfurt. A decision is due today. Bloomberg's Lizzie Burden joins us now from the financial capital of Germany and the home of the ECB, of course. Lizzie, we were expecting a hold from the Fed yesterday. We got one. We are expecting a cut today from the ECB. What are you hearing?
Yes, and it is fully priced by markets, unanimously expected by economists, because they really need to resuscitate the euro area economy. We already had the French GDP print earlier showing the weight of politics on confidence. We're expecting the euro area GDP preliminary Q4 print at 10 a.m. London time, and that'll show German politics weighing in as well. So this cut expected today. Christine Lagarde, though, not expected to comment on future moves, even though so many of her colleagues on the Governing Council dropped hints in Davos about a March cut as well. Why March? Well, by then we'll have more idea about Trump's tariffs on Europe. We'll have the updated forecasts. We'll have the result of the German election. But Anna, it really is April that is the battleground, because as you look towards it, you've got markets pairing their bets for cuts. They actually see a possible pause in April. And if you look on the Governing Council, yes, you've got the likes of Francois-Xavier de Gallo of France, a Dove, very confident about cutting rates to 2% by June. But the likes of Klaas Knot of the Netherlands, not so confident. This big debate about where neutral lies, but things will really hot up as we get towards where most see it, 2%. So just finally, Guy, today, really keep an eye on the guidance. Do they stop describing policy as restrictive? That could be a big hawkish tilt.
Where's the focus, Lizzie? Is it on growth or is it on inflation?
Well, when you've got growth like this, it has to be a consideration, a big consideration for the ECB. And that is why even the hawks at this point are still content with easing today and in March. Big questions for Christine Lagarde when it comes to the press conference. Is the fight against inflation actually over or near to being over? Remember, they had that 2.4% inflation print in December, and everyone seemed to be kind of OK with it, even though they're still concerned about service inflation. That tells you a lot about the balance between inflation and growth concerns, doesn't it? But we're also going to have to listen out in this press conference for their questions about euro-dollar parity. It's something we've talked about on the opening trade so much, Guy. It's something that markets are bracing for. And if you have the gap between the ECB and the Fed opening up increasingly, this weakness in the euro, the strength of the dollar, that feeds the inflation problem, which could mean that the skew becomes back towards inflation.
Lizzie, talk to us a little bit about the growth picture as well. We get another read on euro area growth right before the decision. Any surprises there?
So the expectation is that you're still going to see stagnation, 0.1%, no growth compared to 0.4% in Q3. As I say, it's because of the declining output in Germany, the stagnation in France, politics weighing on both. You did have the PMIs improving slightly in January, but it's likely that the euro area in general will be still treading water in Q4.
All right, Bloomberg's Lizzie Burden in Frankfurt. We thank you so much walking us through, of course, that ECB rate decision. We'll have special coverage of that decision from 1:15 p.m. UK time and bring you the news conference at about 1:45 p.m. UK time.
Also coming up on programming today, the UK government backs airport expansion. We speak to the Chancellor of the Exchequer, Rachel Reeves. That's coming up shortly. But first, Ryanair CEO Michael O'Leary told Bloomberg about plans to build a third runway in Heathrow and described them as, quote, a distraction. We'll also be speaking with aviation in mind to the Wizz Air CEO Jozsef Varadi as the low-cost airline lowers its full-year profit goal. That conversation next. This is Bloomberg.
So I caught up with Michael O'Leary yesterday afternoon. As per normal, he wasn't pulling his punches, criticising the UK Chancellor Rachel Reeves, not convinced that a third runway at Heathrow is going to deliver any kind of growth. This is what he had to say about the Chancellor.
It's rubbish. And not only is it rubbish, she knows it's rubbish. You know, we've given her a growth plan. We said, as Roche in December said, scrap APD, cost $4 billion. It's not big in the UK budget terms, but we would deliver 50% traffic growth, and not just in London, but across all the regional airports of the UK in the next 4 years. And all we got back was, no, we're going to talk about a third runway at Heathrow. She knows a third runway at Heathrow won't be delivered until about 2040, possibly even 2050, if at all. This is a dead cat she's throwing up on the table to mask the fact that she has no growth plan. If you want a growth plan, abolish APD. It puts money back in the pockets of UK families, UK visitors, and it will result in dramatic growth across not just London but the regions.
Give me some numbers on that.
Well, the cost of UK total tax take from APD in 1 year is $4 billion. Total UK spending in a year is about $1,200 billion. So you're talking about 3% of the budget. It's pretty small. But, I mean, our growth, Ryanair's traffic would grow from about 55 million passengers to about 85, 90 million passengers within 4 years. And that would be growth.
That's a commitment.
That's a commitment in writing. We have the aircraft deliveries coming to us. We love to put those aircraft here in the UK, but we're not putting them in the UK if we have our passengers have to pay a tax going from 13 to 15 pounds on tickets, the average price of which are 40 pounds. It's an absurd tax take. It's clear she doesn't know how to deliver growth and that she has no plan to deliver growth. And talk of a third runway in Heathrow is just a distraction.
If there were more slots at Gatwick, would you take them?
We'd certainly talk to Gatwick about them. I mean, there are midday, mid-morning and mid-afternoon slots there at the moment, but frankly, while APD is going from 13 to 15 pounds on a short-haul economy ticket costing 40 quid, we're not growing in the UK.
Michael O'Leary, APD, by the way, is the tax you pay every time you buy an airline ticket, short-haul airline ticket, just for the sake of clarity. Let's stay with the airline sector and figure out what is happening over at Wizz. The stock is down and down hard this morning. The company has lowered its guidance. The company's CEO is Jozsef Varadi and joins us now. Jozsef, let's talk about the figures. Why have you lowered guidance? Can you give us the details?
Yes, absolutely. Good morning, and thank you for inviting me. I mean, I think what we are reporting this morning is kind of a double-edged sword, a lot of good news and some bad news. With regard to the good news, you are seeing a very strong revenue performance, probably beating the whole market in Europe. All the operational KPIs falling in place in terms of aircraft utilization, completing schedules, etc. So we feel very comfortable with the foundations of the business. Where we are falling short is the comprehension of the Pratt & Whitney GTF issue groundings. I mean, clearly we are learning new lessons that the cost of onboarding this whole issue and executing against this is greater than what we expected and what we were planning on. And this is what is in the guidance now. I mean, unfortunately, whether we like it or not, we have to appreciate that at least for the last 20 years I'm into this industry, this has never happened. So every day we are kind of learning, and hopefully we're going to be approaching the end of this learning process. But this is what it is. But the fundamentals of the business, the sentiment of the business are very intact.
Jozsef, you say that you're learning and you're hoping that learning process comes to an end, that you get your arms around this. But how long does this issue with the Pratt & Whitney engines that are having issues and therefore are not spending as much time on your aircraft as you would like, you're having to ground aircraft as a result of that, how long is this going to last? What is Pratt telling you?
Yeah, look, I mean, a good year ago when this whole issue was put on the table, in the industry believed that it would be like an 18 to 24 months problem. Now this is clearly more like a 3 to 4 year issue. So this will continue to drag for some time, at least for the next 2 years. But the good news, at least from our perspective, is that the impact of it is going to be less and less simply because of the growth and the declining proportion of the grounded fleet.
Jozsef, good morning. Let me ask you about the airport announcements we've had out of the UK today, this week. We heard from Michael O'Leary just a moment ago. He described the Heathrow expansion plans as a distraction. Clearly, airlines that don't operate out of Heathrow and don't plan to maybe might take that view. Do you share his view? And do you plan to expand at Gatwick and Luton?
Yes, we are focused on Luton and Gatwick. That's our core operation in the UK, and we remain excited about the growth opportunities in the UK. Yes, cost is an issue, and I think this needs to be seen how that will evolve over time. And that may put the UK into a competitive or a non-competitive position versus the rest of Europe. So that's a significant issue. With regard to Heathrow, to be honest, I mean, this is not an issue I'm waking up with every morning. And I think we all would like to leave at the time the next runway is opening at Heathrow. I don't know whether that's going to happen. But you can look at the whole European context. Actually, Europe is not building runways. Europe is not building airports. There is only one airport project at the moment happening, and it is Warsaw, Poland, and it is still highly debated politically. So this is not an easy way to go. And I agree that if a country wants to boost airline traffic, it needs to look at the taxation, it needs to look at the cost of operations, as opposed to juggling around with runway projects and that kind of ideas.
OK, so you'd be a fan of cutting air passenger duty instead, as well as Michael O'Leary. Let me ask you about City. We're sitting here in the City of London. Many of our viewers, no doubt, travel through the City of London, Jozsef. I know that they've recently applied for approval to fly the A320neos. Are you considering operations at City?
No, I mean, we would not be fit with our aircraft for the technical parameters of the airport. We have too big aircraft for a too short runway, so that's not a reality.
Jozsef, if the British government cut APD, would you put more aircraft to work in the UK?
I think in concept, yes, we would, but you also have to measure that against the available infrastructure at London, Luton and Gatwick. But absolutely, I mean, that would excite us and that would make us motivated for doing more in the UK. But we would need to see how to accommodate that from a capacity perspective through the airports.
So in terms of the scale of that, what would it look like? I was talking to Michael yesterday. He was very keen and talking some very big numbers. He says APD is the single biggest factor preventing him investing in the UK. Is that the single biggest factor preventing you from investing more in the UK?
I think it is one of the biggest factors, but there is another big factor, and this is airport capacity. If you look at Luton, where Wizz Air is the market leader, the issue we have there is the passenger number limitation exposed on the development of the airport. The airport is at full capacity as we speak, so it has to be eased from a regulatory perspective before we can put more capacity into Luton. Same with Gatwick, it is more the runway capacity and the utility of the existing runway infrastructure, how it's used. So that has to be eased as well on a regulatory basis before we can put more capacity into the airport.
Do you get a sense that the green agenda is taking an increasing step back, that governments are going to prioritise growth over green? What does that mean for the aviation sector? What does it mean for Wizz?
I would hope so. I would hope so that, governments and Europe overall will start taking a rational view on the green agenda. It's not like that the industry should not get greener, it should. And Wizz Air itself is one of the ambassadors of sustainability. And we're seeing that by being the innovator in the industry when it comes to technology, we should be really carrying the flag of sustainability. But at the same time, I think you have to be economically rational, and you have to adjust some of the approaches what have been put in place in Europe, especially. I mean, clearly the world is kind of going to some extent a different direction. The US stepping back from sustainability. I don't think that the rest of the world, other than Europe, has ever really engaged with the idea. So it is very dangerous that Europe falls into a highly uncompetitive position versus the rest of the world if government policies are not adjusted.
Jozsef, thinking about the new Trump administration and what they want to achieve in Ukraine, are you making plans around the end of the war? Have you been? Are you planning to? How quickly could you get your operations up and running again?
Oh, absolutely. I mean, we've already got the plans in place to make sure that whenever Ukraine opens up, we are there to fly. I mean, we were the airline leaving the market last before the outbreak of the war, and we're going to be the airline coming back to the market first when the market reopens. We consider Ukraine as home territory for Wizz Air, and we are very motivated to be the first airline to move back whenever we can. But of course, the restart is not in our hands, so we will have to see how the situation evolves.
I understand at Kyiv Airport they run the the baggage carousels every week just to make sure that they're ready when that moment arrives, that they can bring airlines back really quickly. Jozsef, thank you very much indeed for your time this morning. Jozsef Varadi, the Wizz Air CEO. Ryanair, Wizz, both at the more low-cost end of the market. Clearly, they're not going to operate out of Heathrow in the way that others might. EasyJet could look at it, though, which would be really interesting in terms of what it would do. But the sense certainly seems to be that this is something that is going to take an awfully long time to deliver upon. Maybe easier at Gatwick, maybe easier at Luton.
I find it really interesting thinking about the things that would stimulate the economy from the aviation sector, because for years we've heard Michael O'Leary and others talk about, well, in particular Michael O'Leary, about APD. He doesn't like that tax. He always wants that tax to go away or to be cut. And you might, in every other time I think we've interviewed him, you might have thought, well, that's not in the direction of travel, because governments want to disincentivise air travel and this is an easy tax for them to impose. So you're not pushing it at an open door. But then all of a sudden, you've got Rachel Reeves talking about new runways, and this is from the left of UK politics.
She did raise APD as soon as she got in. That came through in the budget. So there was a pickup in APD. So that was the initial instinct, was to actually raise that tax. And it does seem as if business is now, as you say, maybe getting a little bit more traction with tax. Could that extend as far as cutting this tax in particular?
You know, I think it's interesting is that this is serving as a little bit of a litmus test as well in broader Europe. I was just in the EPEM conference in Cannes as well, where infrastructure deals and airport deals are kind of some of the juiciest ones you can make in the PE space. And they were all pointing to the Heathrow kind of this expansion, because Ardian, one of the major PE players out of France, it has the largest stake in Heathrow, 23% of it, and sharing it with, I think, the Qatar Authority, the Saudis as well, and a few other players. But it has the biggest stake, and they're one of the biggest infra investors. But it is a litmus test, because if this expansion doesn't go through, and if they're not able to make real value creation out of it, this could actually maybe pop some of the bubble in PE infra right now.
And it might not be entirely this simple, but of course the plans at Heathrow will be largely delivered by the private sector. Reducing APD falls to the public sector and impacts the fiscal headroom which she has, which is sort of not very big, and we've talked about many times.
We're going to have to see cuts in order to secure that kind of that fiscal credibility that maybe she needs. She's been speaking to ITV this morning, the Chancellor, Rachel Reeves. She says in 10 years we can get flights taking off from Heathrow. Now, flights are taking off from Heathrow now, but I'm assuming that she means on the extra runway. Spades in the ground in this Parliament. That's slightly different to what I heard last night. The expectation I heard last night was that we'd have planning permission by 2029, that the expectation that we now have shovels in the ground by 2029 is a little bit different. But 2029 is miles away. If you want to get growth going, it's going to take quite a long time. This is not going to deliver growth this Parliament. So how do you deliver growth this Parliament?
Yeah, it does feel as if a lot of what was talked about yesterday has a medium-term horizon for delivering. I mean, even, you might start work in some years, but what happens now? What happens to those businesses that have been reeling from higher wage bills and higher tax bills as a result of the budget?
Yeah, 6 months of the Labour government here, 6 months and counting. And I think it's really interesting that not only have the growth kind of prospects not been created in the short term, but I wonder how much of the planning is impacted as well, because the UK, although perhaps insulated to some extent from Europe in terms of the China read-through, the US read-through, still has to deal with maybe what happens in the tariff front, in the quota front, et cetera. That very much impacts the UK's plans.
The UK hopes that it's immune from all of that. The UK hopes that a better relationship with the Trump administration will deliver fewer ripples than everybody else has to deal with, or shock waves that maybe everybody else has to deal with.
Our suggested ambassador to the United States has been backtracking on his previous views around President Trump quite quickly to try and secure his acceptance to the US administration.
Well, you've seen this in the assets, right? I mean, Jordan Rochester made the point that when you see these hits and these kind of tumbles in euro-dollar towards parity, the cable holds its own because that read-through may be a little bit more insulated. So I'm curious if there is a market stability qualm.
I was really interested in some of the labour data we've had out recently. Clearly there are flaws in the official data, have been for a long time, around the unemployment rate. But some of the readings we've had from the recruitment companies cutting back on their guidance, the PMI data, the message from that's been really quite weak.
So you think about what the consumer is doing right now. The consumer is building savings and not spending. And that basically signals that the consumer is worried about what happens next economically.
Yeah.
If you could get that unlocked, do you get a better economy quite quickly?
OK, let's linger on this theme of the UK economy then. The UK Chancellor, Rachel Reeves, has outlined a series of major infrastructure projects, including, as we've been discussing, a new Heathrow runway aimed at reviving Britain's economy. She joins us now. Chancellor, very nice to have you with us. Thank you for joining us. Let me start with the growth announcements. A lot of focus on the runways. We've been talking about what what they can deliver. They do seem to be medium-term plans for growth rather than short-term plans. What do you say to businesses that have just faced higher wage bills and higher tax bills, or will do as a result of your recent budget, and they want growth now, not in some years' time?
Well, look at the reaction from business to the speech I gave yesterday. 2/3 of businesses in the instant reaction said they now feel more confident about the government's growth plans. I want to make no apologies for putting our country back on the right path. And because of the planning reforms that we're making, alongside the big announcements yesterday, it means that we can crack on and get these projects delivered quicker, because they won't get clogged up in the courts, because we're reforming the way that you build stuff in Britain.
Do you not feel, though, Chancellor, that you need to deliver something that will deliver now, that will give an uptick to growth now? We're looking at the labour market data, messages from recruiters, the purchasing managers' surveys, all of those telling us quite negative things about the labour market, saying that businesses are shedding jobs at the rate we haven't seen since the financial crisis.
Well, if you look at the IMF forecast for the UK, they've revised up the UK's growth prospects for this year. The PwC survey released at the beginning of last week of global CEOs who see Britain as the second best place in the world to invest outside the United States. The first time in 28 years we've been at that position in the league table. And yesterday, businesses coming out and backing Labour's plans to grow the economy and making them feel more confident about the future.
Chancellor, good morning. Can you give me a growth number by the end of the year, then? If you are more positive about what growth is going to deliver in the UK, what growth numbers we can expect, do you have a number in mind? Do you have a target for this year, and can you share it with us?
I'm not going to do growth forecasts. That's up to the Independent Office of Budget Responsibility, the IMF and others to forecast the UK's growth prospects. But what I did yesterday was to set out some ambitious plans to get our economy growing, to get spades in the ground, to deliver these infrastructure projects that in many cases have been available for years now, but the previous government balked at. So whether it's the Oxfam Growth Corridor, to create Europe's Silicon Valley here in the UK, or the third runway at Heathrow, a new stadium at Old Trafford, the Transpennine route upgrade, a new airport at Doncaster. All of these things are about a confidence in Britain, saying to investors, look again at Britain. This is a great place to invest, to start and grow a business, and this government has your back.
When does the first spade go in the ground in any of those projects?
Well, let's take Heathrow. We've asked Heathrow to come forward with plans by this summer, and we hope to be able to grant a development consent order in this Parliament, so spades in the ground in this Parliament. But other projects can get going sooner. We've committed to build 1.5 million homes in this Parliament, and we've made it easier to build, for example, around commuter railway stations, with the default answer for planning applications now being yes. So Heathrow, spades in the ground this Parliament, 1.5 million homes in this Parliament, because we want to go further and faster to kickstart economic growth, to make our economy more competitive, to be a more attractive place for businesses to invest, and ultimately to make working people better off.
Chancellor, we've heard a lot about growth over recent days, and there do seem to be still some divisions amongst your team around what all of these will mean for the environment, of course. Businesses might be a little bit confused about what kind of reaction function we can expect you to have around green issues. Do you think that the green policies of this government, or the push towards electrification, for example, all of these things, are they a little harder to predict for business now than they were?
Well, look at the record of this government. We've ended the moratorium on onshore wind and indeed have signed off planning applications in just 6 months for new onshore wind farms, signed off planning applications for for solar farms that the previous government blocked. We've invested alongside with BP and Equinor in carbon capture and storage in Teesside and Merseyside. So we know that there are huge industrial and investment opportunities for the private sector in these jobs and industries of the future. And Britain has unique strengths in this area because of our industrial heritage, because of our geography, to reap the benefits of that investment.
OK, Chancellor, can I ask you just about the US Treasury Secretary, Bessent, who is now going to be your counterpart in the United States? I wonder what you plan to discuss with him, and do you have plans for a conversation soon?
I'm really pleased that Scott Bessent was confirmed earlier this week as the next US Treasury Secretary. I have written to him, and I look forward to talking to him soon about how our two countries can work together to grow our respective economies. And I look forward to having a close relationship with Scott Bessent and his team at the US Treasury.
OK, Chancellor, thank you very much. Thank you for joining us. Rachel Reeves, the UK Chancellor of the Exchequer.